Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at Rocket Lab.
If you find our talks useful, please consider subscribe, like, and comment underneath.
And a quick note before we get into today's stock. If you need emergency cash and want to look at a short-term installment loan option, you can check out MaxLend Loans through my link below.
Right.
Eligible customers may qualify for loan options up to $3,750, and funding may be available quickly if approved. But please be careful. Always read the full loan agreement, APR, fees, repayment schedule, and total cost before signing anything.
Absolutely. So let's jump right into the hook here. What does it actually take to build a legitimate, scaled rival to SpaceX?
A lot of patience and a ridiculous amount of cash, for starters.
Exactly. And that's exactly what we're looking at today. There is this massive tension at the core of Rocket Lab right now.
Yeah, you have this enormous backlog of orders, literally billions of dollars just, waiting to be recognized.
Right.
But at the same time, they are under relentless pressure from Wall Street to actually show a profit.
It's the classic growth versus profitability tug of war. And how they navigate this over the next year is basically going to define whether they survive or not.
Oh, absolutely. It's make or break.
All right, let's move into the wealth building context. Because whether you're tracking the aerospace sector for, investment ideas, or you're just fascinated by the new space race, we need to talk about why this matters for your portfolio long term.
Right, because space isn't just a billionaire's hobby anymore. It's shifting entirely. It is rapidly becoming critical infrastructure and, quite frankly, a defense necessity.
And when you're looking at building wealth in a sector like that, you are looking for monopolies, or in this case, the companies trying to break a monopoly.
Exactly. Right now, SpaceX is the 800-pound gorilla. But the U.S. government and commercial satellite operators, they are terrified of being totally dependent on just one vendor.
Right, because if you're the Pentagon, you cannot afford a single point of failure for access to orbit.
No, you absolutely can't. And that geopolitical reality is the foundation of the wealth-building thesis for Rocket Lab. They are positioning themselves as the only viable scaled alternative.
Which makes this a multi-year compounding story. You're not trading this for a quick 10% bump next week.
No, not at all. You are betting on the structural need for a second major player in space over the next decade.
Now let's look at the fundamentals. Because grand visions are great, but rockets run on fuel, and aerospace companies, well, they run on cash.
They absolutely do. And the Q1 2026 numbers they just dropped were honestly pretty staggering on the surface.
Yeah, we're talking about record revenue. They hit $200.3 million for the quarter.
Which is just massive. That's a 63.5% jump year over year.
And it completely crushed Wall Street's consensus estimates, right?
It did. But what's really interesting is the split. So product revenues made up $127.5 million of that.
Okay.
And then service revenues brought in $72.9 million.
And why does that split matter so much?
Well, because it shows they aren't just a taxi service to orbit anymore. The services side, that's the launch.
Yeah.
Right? Putting the payload on the rocket.
The actual, blast-off part.
Right, exactly. But the product revenue, that $127.5 million, that's them selling actual hardware, satellite components, spacecraft systems to other companies.
Oh, well.
Yeah, and it's a much higher margin business. And it is growing incredibly fast.
Okay, but we have to unpack this because we really have to address the elephant in the room here.
Uh-oh. The net loss.
Yes, the net loss. They had record revenue, they're selling more products, all of that is great. But they still posted a GAAP net loss of $45 million for the quarter.
Yeah, they did.
And I'm not a Wall Street accountant, but if I run a lemonade stand...
Right, the lemonade stand analogy.
And I manage to double my sales, but I still end up losing $45. At the end of the day, I'm doing something fundamentally wrong. How is losing $45 million a good thing here?
It's a completely fair question. Nobody likes seeing red on the balance sheet. But to understand why the market isn't panicking, you have to understand operating leverage.
Okay, walk me through that.
So first, look at the trajectory. That $45 million GAAP net loss, and GAAP is just the strict standard way of reporting, is actually a huge improvement.
Really? Compared to what?
Well, they lost $60.6 million in the exact same quarter last year.
Ah, okay. So the gap is actually closing.
Exactly. But the real magic is in their margins. Their GAAP gross margins hit a record 38.2% this quarter.
Meaning for every dollar of revenue they bring in, they're keeping roughly 38 cents after the direct costs of making the product?
Precisely. Which is way up from previous years. They're getting substantially more efficient as they scale.
That makes sense.
But the most fascinating part of their fundamentals is the financial fortress they've built underneath that $45 million loss.
You're talking about the balance sheet.
Yeah. Right now, Rocket Lab is sitting on $1.2 billion in cash and cash equivalents. And after some recent capital raises, they have access to over $2 billion in total liquidity.
And virtually zero debt.
Right. Virtually no debt.
Wait, $2 billion in liquidity? For a company this size, that is an insane amount of cash to just have lying around.
It's a massive war chest. And honestly, it explains the net loss. They are intentionally unprofitable right now.
Intentionally?
Yes. In aerospace, if you are turning a massive profit early on, it usually means you're starving your research and development.
Oh, I see. You're not building the next big thing.
Exactly. Rocket Lab is aggressively reinvesting every spare dollar back into growth, specifically the development of their next-generation Neutron rocket.
So they could technically stop R&D today, fire the engineers, and show a profit.
They could. They could turn a tiny profit just to appease short-term investors or do stock buybacks. But they're playing the long game. They're using that cash to build a massive moat.
Which makes sense, but having cash is one thing. How you deploy it is what actually dictates if you survive.
Exactly. And they aren't just hoarding it. They're using it for a really aggressive acquisition strategy. They're vertically integrated.
Like buying up companies like Mynaric.
Right.
And Motiv Space Systems.
Yes. They are insourcing the manufacturing of critical, highly complex components. We're talking solar array drive assemblies, laser communications terminals.
Which, just to clarify for everyone listening, those components are basically the lifeblood of modern satellites.
Right. Take laser communications. It allows satellites to beam massive amounts of data to each other in orbit without relying on radio frequencies, which can be jammed.
So by bringing that in-house, they aren't waiting on some third-party vendor who might be backlogged for 2 years.
Exactly.
So it's basically like Apple deciding they don't just want to design the iPhone, they want to actually own the factory that makes the glass screen.
And the microchips.
Right. So absolutely nobody can bottleneck their supply chain.
That is the perfect analogy. In aerospace, a supply chain delay is fatal. If you don't have the solar array drive, the little motor that turns the panels to the sun, your $100 million satellite is essentially a brick.
A very expensive brick.
Yeah, but it goes deeper than just efficiency. This vertical integration is what makes them incredibly attractive to their most important client.
The national security apparatus of the United States.
Yes. This is where they transition into a bona fide defense prime.
Right, because look at the contracts they're pulling in. They just landed that $816 million Space Development Agency contract to build and operate 18 satellites.
Yep. And they were selected for the Department of Defense's Golden Dome space-based interceptor program with Raytheon.
And a $30 million hypersonic test contract with Endural. Hypersonics, missile interceptors, encrypted constellations.
They are weaving themselves into the fabric of the military. And if you connect this to the bigger picture, this deep integration creates immense switching costs.
What do you mean by switching costs in this context?
Well, think about it from the government's perspective. Once a company's hardware, their laser toms, their encryption protocols, is certified and baked into the U.S. missile warning system.
You don't just swap them out for a cheaper startup to save a few bucks.
Exactly. Not when national security is on the line. The bureaucratic hurdle is too high. So Rocket Lab makes themselves indispensable.
That brings us to the Catalyst timeline, because to justify this, they have to keep delivering. What are we looking at over the next few months?
The calendar is packed. We've got Q2 earnings coming up in August. Management is guiding for another jump in revenue, expecting between $225 and $240 million.
That's a solid jump.
Yeah. We also have the expected closing of that Motiv Robotics acquisition, which is a huge deal.
Didn't Motiv build the robotic arm for the Mars rover?
They did, the Perseverance rover. Bringing that kind of elite, Mars-proven robotics heritage in-house gives them capabilities almost no one else has.
But those are just the appetizers, right? The main course is the debut of the Neutron rocket.
Oh, absolutely. Neutron changes everything. It's their medium-lift vehicle slated for late 2026.
Designed to carry massive payloads and compete directly with SpaceX's Falcon 9.
Right, because right now, their Electron rocket is fantastic, but it's a small lift vehicle. It's like a boutique delivery truck. Neutron is a massive freight train.
Now let's pivot to the chart, because this is where it gets confusing. They have a $2 billion war chest. They are an indispensable U.S. defense darling. They crushed earnings.
And the stock dropped.
Right. Why on earth did the stock drop 7.2% right after they announced these record earnings?
It feels super counterintuitive. You see record revenue, then a sea of red in your brokerage account. But you have to look at the technical setup.
Right.
Rocket Lab is a high beta growth stock. Right now, it has a beta of 2.3.
Let's translate that real quick. For you listening, beta basically measures how violently a stock swings compared to the overall market.
Exactly.
If the S&P 500 is a 1.0, a 2.3 means if the market sneezes, Rocket Lab catches a severe cold, but if the market rallies, it goes to the moon.
Right, it's highly volatile. And prior to this report, the stock had been on an absolute tear.
People were buying in on the hype.
Exactly. The price pushed up against a major psychological resistance level. So when earnings came out, and they were good, but not magically profitable, you saw a classic sell the news event.
Traders cashing out to take profits.
Exactly.
So what does market sentiment look like beyond just the day traders? Because here's where it gets really interesting and maybe a bit concerning.
You're talking about the insiders.
Yes. We saw the chief financial officer sell over $4 million worth of stock in March.
Yeah.
And another insider sold over $2 million. If the people running the company are taking their chips off the table, shouldn't we?
It's totally natural to feel that way. Insider selling always triggers alarm bells. But context is everything.
Okay, what's the context?
That $4 million sale by the CFO, it only represented about a 4% reduction of his total position.
Oh, wow. So he still holds a massive amount of stock.
He still holds the vast majority of his wealth in Rocket Lab. You know, insiders sell for all sorts of reasons, paying taxes, buying a house.
Diversifying, sure.
Right. They only buy for one reason, but they sell for many. To get the real sentiment picture, you have to contrast that with what the institutions are doing.
The Wall Street heavyweights, what are they doing?
They are accumulating shares aggressively. The smart money is buying.
Really? Like who?
AQR Capital Management increased their holdings by an astounding 114%.
Wow.
Yeah, and UBS Asset Management boosted its stake by 13.3%.
So while retail traders were getting spooked by a 7% drop, the massive funds were using that dip to buy more.
Exactly. And if you look at the volume on the day the stock dropped, it was incredibly high, over 20 million shares traded.
So that wasn't panic selling.
No, it was a repositioning. Weak hands sold, and institutions gladly bought those shares to build a long-term base.
But not all analysts are entirely on board. We've seen some mixed ratings. What's driving that hesitation?
It's entirely valuation-driven. They aren't saying it's a bad company. They're saying the stock operates with a negative PE ratio.
Meaning no earnings to divide the price by.
Right. Investors are paying a massive premium today for the future cash flows of 2028 and beyond.
Now let's talk about the risks. Because whenever a stock is priced for perfection based on the future, it creates severe vulnerability today.
It really does.
So what is the bear case? What happens if they hit a snag with the Archimedes engine?
That is the single biggest risk, the execution risk on Neutron. Building a new orbital-class rocket engine is notoriously one of the hardest engineering challenges in human history.
The industry joke is that space is hard, but rocket engines are unforgiving.
Exactly. If the Archimedes engine fails its qualification testing this summer, or if there are massive R&D overruns, Neutron gets delayed into 2027 or 2028.
And if that happens, what happens to the stock?
Oh, it faces a severe derating. Wall Street will punish the price severely because the momentum stalls out.
And the commercial operators who need a ride to space won't wait around. They'll just go book with SpaceX.
Exactly. It's a binary risk. Either they nail the engine tests and the stock flies, or they hit a snag and it plummets.
Well, wait, didn't we just talk about their ultimate safety net?
Yes. The $2 billion in liquidity, let's say the worst-case scenario happens and Neutron is delayed by 18 months.
Okay.
Because they are sitting on all that cash, they have the runway to survive. They will not go bankrupt.
And more importantly for you as an investor, they will not be forced to dilute the stock.
Yes, that is crucial.
Just to clarify, dilution for everyone listening, it's when a company is running out of money, so they just print millions of new shares and sell them to raise cash.
Right.
But by doing that, they make the shares you already own worth less. It's like slicing a pizza into 16 slices instead of 8. You have more slices, but way less pizza per slice.
That's a great way to put it.
Yeah.
Because Rocket Lab doesn't have debt breathing down their neck, they don't have to dilute shareholders into oblivion just to keep the lights on during a delay.
So some of that execution risk might actually already be priced into the stock.
Exactly. The market knows rocket science is hard.
So with everything on the table, what's the final verdict? We've got a company bridging the gap from niche small launch to a heavily armed aerospace and defense giant.
Right. They're growing revenue by over 60%, expanding margins, hoarding cash. The fundamentals are incredibly bullish.
But
But this is a multi-year compounding story. Converting that $2.2 billion backlog into positive net income will take 2 to 3 years of flawless execution.
so it requires immense patience from anyone holding the stock.
Yes, you're waiting for Neutron to fly regularly and for defense contracts to fully scale.
It's a story of patience for sure. But think about the geopolitics for a second. Ask yourself this. Is the U.S. government now structurally incentivized to ensure Rocket Lab succeeds?
Simply because they cannot afford a single private company holding a complete monopoly over the stars.
Exactly. They might just ensure Rocket Lab's success because they literally have to.
It's a fascinating dynamic to watch unfold over the next few years.
Need emergency cash. MaxLend Loans offers short-term installment loan options up to $3,750 for eligible customers. Apply through the link below and carefully review the APR, fees, repayment terms, and total cost before accepting any offer.
And if this episode helped you, please subscribe, like, and comment underneath. We'll see you in the next Smart Wealth with Chanchua episode.